Okay, let me just clear the screen. Hello, good morning, everybody. Welcome to another FX.GOLDSMITH breakdown here on gold spot versus the US dollar. Today's date, 2023, 10/22. It's about quarter 10:30 here on Sunday for me. So hopefully everybody's having a good weekend. Just wanted to come on here and do preparation for myself for the week to come. See what happened over the previous couple of weeks and month, and see if we can predict and get a little bit of an edge for the upcoming week moving forward for gold's price action here. So as you can see, we're on the monthly time frame, just zooming out, seeing what we've done here so far. We do have another week left of the month. However, you can see that at the start of the month, grab some liquidity in the 1800s, 1810s, 1820s type of support there, and ended up breaking previous candle high and looking like we broke previous resistance on the monthly time frame. So let's see if we can come all the way up past the 2000s at least and see what kind of structures in these wick rejections here on lower time frames. So let's indeed drop down to the weekly time frames, see what happened. Let's see if we can get a little bit better of a picture here for price action. So again, coinciding in the 1810s, 1820s area, a good strong push. 2 weeks ago closed with no top wick with some serious momentum in the market. We got a bottom wick here down at the 1910s and continuation into the 2000s here. Okay, so we've closed above here. We're looking like we're closing above the 1960s. Resistance now turned support. Looking left, what do we have? Closed above that. Okay, so just based on the weekly time frame here, guys, it does look like we're going to continue hopefully into the 2010s, 2020s area for next week. A very suitable pullback area would be into the 1960s here, I would say. Or I mean, even further, you could say into the 1943. So just again, solely based on the weekly time frame, which is a very kind of wide zoomed out perspective for you guys. This is what I can see happening next candle. Printing at some point, a bearish candle or a bearish bottom wick, and then flipping and driving to the next top of zone there. So again, zoomed out perspective, weekly time frame. It's nice to look at it from a higher perspective because it's easier to predict what's going to happen, right? I can predict that we were going to go bullish here. I couldn't predict when the pullback was happening, how it happened, how tall the top wick was before it flipped, etc. Right? So easier to predict higher time frame moves. So let's go with that. We're going to assume that next week's going to be bullish. We're not at necessarily a top of zone here. We have just closed above this zone. So let's assume we're going to get a continuation right after we get this pullback. Predicting where the bottom wick is going to reject is a bit of a skill itself, but obviously we know that we've closed above resistance, which is now a support. So it's just how far we're going to pull back. 1960s, 1945s. Let's drop down to the daily time frame and see. We'll leave some of these lines and just see if they can line up at all. So this one right here around the 1940s, that lines up perfectly there. 1944, let's call it. Let's round this up. As a matter of fact, let's call it 1945. Okay, so that lines up well. This lines up okay too on some of the structure here. I would probably move that just on to 65 on the daily time frame, and then I would add kind of our top of zone right here. So we didn't quite close above the daily resistance in and around the 1980s. However, we have closed above some of these intra-session and intra-zone resistances on the daily time frame. So again, this adds up. Let's see if we can get some pullbacks into the 65 area, see if we can reject here, or even into the 55 area based off of looking left price action. So if we get rid of that, this is where price is rejected after rejecting 80s, right? So let me put a full, let's map this out how I would normally do for you guys. Boom. Put our zones in. Now these are the stronger zones. When I highlight these, horizontal raise here with a rectangle. Those are kind of my top and bottom zones for the most part, targets type thing. And then if I do some, just lines like this, those are more so intra-session or intraday targets or supports and resistances, etc. So let's get this level, and then let's take a, excuse me. So we didn't close above our 1981, 1980s resistance. Just like this candle here looking left, let's see what happened. We've come up here, we've tapped into this zone, and we've closed below. What happened? We tried again to break above. We failed to close above and hold trading above 1980. We come back down into 1954. We create a support and we try and retest. So that's essentially what I'm looking for now. Unless the next daily candle closes above, this could potentially come back down, come into your 1960s, 1965s. Again, looking left, some resistance, turn support. All right, so right in here, you can very well start to form some structure, create some support, maybe drive down here with some liquidity wicks, flip and continuation into your 1910s, 1920s, or at least back into the 2000s, retest the high. 2000s is a strong psychological level as well, and you can see here in and around those levels, lots of rejection, lots of struggle, right? I remember months back when we were trading in that price. So yeah, let's see if we can get a pullback, 65, 60s. Let's see on the smaller time frames on the 4-hour. Once we start creating some support and getting some candles to close in our direction, which is bullish, of course, then we'd love to take some positions. In a perfect world, which gold and trading in the markets never are, we would correct this impulsive move on the daily, come all the way back down here. We would form a bullish candle, and we would take entries all the way back up from 50 to 80 with us expecting to create a new high, right? That's not always going to happen. It's not always that clean. So you got to just kind of anticipate and know that we are very bullish and wait for something like this. One pullback candle, a candle pointing in your direction, and a continuation. That may not happen that slow. Gold is a beast, so we all know it moves very quick, and pullbacks can happen and continuations can happen in one candle on one day, especially with 3 high volume sessions in a day. That's very reasonable. So for now, let's see if we can get some rejections at 65. If we close below 65, let's see if we can get some rejections around 55, and if not, around 45, right? These are all areas that I'm looking for buys. Just because we close below 65 doesn't mean I'm all in for sells. It may mean that I take a counter trend move. However, I'm not expecting to hold full position. I'm not expecting crazy runners, right? I'm in and out of the market, taking my piece of the pie until the bias sets up in a buy bullish direction. The candles print according to the plan. So until we close above here, or below 44, or even below 1920, I'm very bullish and will be until that happens. So dropping down into the 4-hour time frame, let's see what we can get here. Let's see if some of these lines kind of correspond. We created this small minor support around 76. Created a resistance here after tapping into the 1998s, the 2000 psychological level. Okay. So let's again, see if we can start to close below this first minor support. That's going to be our first indication that we're going to come down for a steeper top wick or bottom wick, into 1965s. So closure below there, you can probably take some short pullback moves into the 65s, into the 60s, and let's see if we can bounce from some of this resistance turn support or some of these supports as well. So essentially, that's what I'm looking for, guys. Pullback, buyish, bullish candles to set up here, entries, high volume times, and a new high to be created, and see if we can roll over this momentum with this very strong weekly candle closure above some of these resistances here. So let's see if we can just pull back on the daily candle or two. Who knows? Check the Forex Factory for some fundamental news catalysts, in addition to the intentions as well, which continues price action bullish. So for now, let's see, until we get that next daily candle closure above, we don't know if we're going up to the 2000s again, or making it above 2000 Pull back here to at least retest the highs, assuming we're going to wick up and retest those highs, but it's not guaranteed. We need that closure above, right? So understand that as well, or even a further pullback into here. The same thing as well. Again, knowing that we can reject top of zone until we close above it, but with volume, see if we can close above into the 2000s again. Wick fill the top of this and see what happens, right? Maybe get a push to 2010. Yeah, that's pretty much it, you guys. Let me maybe draw a couple of candles for you guys. Let's annotate something. Let's draw. Boom. Let's go bearish here. Let's draw something for you again. Bullish. So something like that, if I print these two candles, what would this look like? This would look like a weekly bottom wick, a flip and continuation for a weekly wick fill, right? This may happen June. This may happen in the first, this is the daily time frame. So the first 2 days, you may look like you have your full weekly bottom candle push continuation. And then who knows what's going to happen in and around the 2000s, 2010, right? We can very well close back below. And now we have a bearish candle on the weekly time frame as well. But this is something that I'm looking to happen on the daily time frame. This is a possibility. We may roll over right away though and push up immediately with Friday's candle closure. This can come down here, bottom wick, flip, and push right away. Sundays, lots of times I've seen that happen, where Sunday market open simply carries on the momentum from the week prior. And your kind of weekly analysis is not what's the word I'm looking for? Your weekly analysis is kind of occurred in one day, in one session, which is a session that you wouldn't normally trade Sundays, etc., right? Lower volume, etc. if you're a Monday to Friday type trader. So yeah, be aware that can happen, and that would line up perfectly with some of our zones here at 65 and 55 rejection. So that's pretty much it, guys. Look for the pullbacks on the smaller time frames. Look for the entries after bullish candles have been kind of printed in your direction in and around the time frames that you guys know volume and momentum can occur. Be careful with news this week. Check Forex Factory and try and stay up to date in regard to economic tensions and stuff like that. So all of that's going to drive and affect price action. But other than that, that's it for me, guys. Thanks for watching. Thanks for paying attention. And hopefully, we can take advantage of gold and see some more rallies. So enjoy your weekend, guys. We'll talk to you for New York session on Monday. Thanks so much.